Today, I have the pleasure of being with Charles Flynn from Mid-Atlantic Capital Associates. You started this firm several decades ago. Can you tell us more about what you do in the market, please, Charlie?
I sure can, Tracy. What we do is we do financings, everything from convertible debentures with private companies. We do RTOs, which are reverse takeovers. I assume you've got an educated audience and understand what that means. We do IPOs, which are initial price offerings. And we work with companies around the globe, from Singapore to Dubai. We got my partners in Dubai this morning, to all across Europe, all across North America. We've been involved with every exchange from AIM to Berlin to Tradegate to the LSE in London, the obviously all the exchanges in Canada, CSE, TSX, CBOE, and the TSX Big Board, and all the exchanges in America, NASDAQ, uh, um, Amex, New York Stock Exchange, and once in a while, even the OTC.
So, my understanding, and one of the compelling reasons that I think a lot of people enjoy going to your website, which is outstanding if you ask me, is that you are able to pick the stocks, or you're very good at picking stocks that are undervalued and getting on board for yourself, your team, and your investors. Would you say that's a correct appraisal?
I would say it's a very correct appraisal because we do extensive due diligence with our entire team of guys from we have lawyers on our staff, we've got accountants on our staff. We do extensive due diligence. We find out if a guy had a nosebleed in the first grade, how he got it, if he's a chairman or a director of a public company. We look at private and public companies, and we find out the backgrounds of all the individuals first, and we look at their structure second, and then we look at the story. And if those three things align, then Mid-Atlantic is interested. Then we've got to pick the right timing on when to get involved, at what price, and how it's structured.
Now, when I was on your website, I noticed there's a company that you have a tombstone for called Rektron that has done very well. In fact, has
Yeah.
outperformed most of the market here this last year. Can you tell us a little bit more about how you selected Rektron and why you like this company?
Well, sure. Rektron was a company that was extremely undervalued, trading as a private company in London. Well, they're based in London, but they have 13 locations around the world. They were doing 2.5 billion a year in revenue. They're they're profitable. It's skinny margins when you're in a commodity market, but they're profitable. 30 million gross profit last year in trailing, and about 20 million EBITDA. So we saw a great opportunity there to take a company public in Canada. And because of me, we got them to go public on the Canadian Stock Exchange, which is the largest IPO ever done on the Canadian Stock Exchange. Since that point, it's been the most successful IPO ever done on the Canadian Stock Exchange. The company is continuing. The company is it's only just beginning. The story is still just beginning to unfold on what it's going to do. It's like this comparable to Trafigura, where the guys used to work, Glencore, where the guys are very well known, and all those other commodity trading companies that have done extremely well in the last, no, well, since really Mark Rich started Glencore as Mark Rich Commodities about 20 years ago now. So we saw a great opportunity. We talked him into coming to Canada. We financed him. Mid-Atlantic did all the financing. We paid for all the expenses to go public here, and we saw this company that could really do well in the exchange.
Okay, so with everything that's happening in the market, I'm certain that you have a lineup in your front of your office for companies seeking capital and your expertise. Can you tell us what is your ideal type of company? Give us a little bit more of the criteria that so that when they're watching this interview, they can go, okay, well, check, I've got this information, and now I'm going to contact Mid-Atlantic Capital.
Sure thing. Well, here's the thing, Tracy. Basically, on deals, we are deal agnostic. We don't care if you're making widgets in China. Well, we do maybe now with the tariffs on it. We don't care where you're located in the world, what field you're in, whether it's pharmaceuticals, biotechnology, mining, oil and gas. What we care about is three things and three things only. And the first and most important thing I learned years ago in New York when I worked in New York on Wall Street. We first thing we look at is the people. We want to make sure the people are good because good people make a bad deal good. Bad people make a good deal bad. So the first thing we look at is people extensively. The second thing we look at is the structure. We want to see the structure of the deal. How did it start? How were the founding shares created? How does it move forward in when it has to do? It has to. Obviously, every time you do a raise, either a debenture or equity, you suffer some kind of dilution. So we make sure the structure is in place that they can raise the money needed to continue. And the third thing we look at is a story. It's got to, as a good friend of mine, well, good friend, I'm not many people know him nowadays. I'm aging myself. But Murray Pesham used to say, when people want green shoes, give them green shoes. They want red shoes, give them red shoes. Don't fight the market. And I think Warren Buffett's a good example of that as well, by the way. He sees what's coming and he goes with it. And that's what Mid-Atlantic does on the story part of the equation.
Well, with everything that's going on in the market right now, do you have any advice or wisdom to our investor audience?
Yeah, sure, I got very good advice. Remember, the stock market and wealth in general is a transfer of income from the impatient to the patient. Be patient. Don't please don't pay attention to news headlines. Don't listen to the talking heads on TV. Take advice from yourself mainly and from people you respect, not from the people that are what I call 20/20 hindsight. Sorry, what they do is right after the market falls, they get somebody on TV that tells you why it's going lower. If it doesn't go lower, that guy's never seen again. Right after it goes up, they have somebody on TV, a talking head, that tells you why it's going to go higher. If it doesn't go higher, you don't see him again. If it does, if either one of them are right, they keep putting them on until they're wrong. So don't listen to TV, don't listen to headlines. Be patient, buy value. I mean, Warren Buffett says it best: value investing and patience.
Well, you heard it here from Charlie Flynn, a well-known player in the Canadian market. You're based in Vancouver, correct?
Correct, Vancouver Island. Just an ocean between a little ocean between me and them.
Okay, and for more information, please go to the following website. Charlie, we're going to have you back again. I hope you don't mind giving us more stock tips and picking some stories that you personally and the team at Mid-Atlantic Capital love. Good?
Thanks. It's been a long time since I've done an interview, so thank you.